Hey everyone, this is Michael
And Alexis.
with Barely Bullish Investing. We wanted to go ahead and do a chart update video because there's been a lot of interesting action for the last couple of weeks, days, months, and I like to keep an eye on the price of gold to determine where there might be good buying opportunities kind of around the dips, and I also have some short-term investments related to precious metals, not very much, but I have them out, and I like to just kind of keep an eye on them for that reasons too, because I like to stack gold. I like to buy gold investments kind of as a long-term investment for the multi-year period, but I also like to trade it a little bit too. And so there we go. I like to focus on the gold price because I feel like the gold price really, if it doesn't lead in terms of time always, for example, the gold miners and silver, I think it leads in terms of momentum and substance. These are just terms I'm inventing myself, but that's kind of how I see it. Where gold goes, everything else tends to follow ultimately. I feel like it's the stronger market. It's also the more liquid market in a lot of ways. Central banks aren't buying gold mining stocks. Central banks aren't buying silver, but central banks, large institutions, are constantly trading gold. So I feel like the price action is more reflective of market sentiment than, for example, the GDX VanEck Gold Miners ETF or, for example, the silver continuous futures contract. So I have pulled up the daily on the gold chart here, and I just want to start off by pointing out some just general background themes. What we can see here in terms of technical analysis is a pretty well-defined bull flag. We have a rise here from around 2018, price of about 1172 up to an all-time high. Technically, in the intraday, it hit, I think, 2070. This is a mathematically smoothed out and adjusted continuous futures contract chart, so it's showing here as 2088. But anyway, it had a pretty remarkable rise there. And then since then, it's been forming this long, long pennant. Now, what I thought originally was that we'd see sort of a cup and handle pattern.
A cup and handle pattern.
What I thought originally is we'd see gold come up. Actually, I'll go to the weekly on this so we can see it better. I thought we would see, we had a nice big long cup, multi-years, right? And I thought we were going to have a handle. It was looking that way, especially last year around the time of the Ukraine invasion. It was looking like gold was going to kind of go up, shoot through that, finally get through its resistance. Well, as we can tell, that did not materialize, right? So, unfortunately, that didn't work out too well.
Don't some people believe that this could just be a bigger handle, that it's still
Yeah,
forming?
you can make the argument. A lot of technical analysis, it is sort of subject, it's the eye of the beholder. You could say, well, this is the handle right here, okay, sure. It's just sort of an oddly shaped one. So, yeah, I guess if you stretch the definitions and if you squint at it the right way, you can make it look like whatever you want.
Well, personally, that's why I'm not a huge fan of technical analysis, because I do feel like it's not, maybe, to me, the best predictor of fundamental underlying reasons. Well, obviously, it's not fundamental at all, but, I just think the fundamental argument for investing in gold is stronger than the technical one to me.
No, I agree with you, but the question is, okay, if you believe that, when do you buy? So here's the chart. Do you buy in 2 weeks? Do you buy in 5 weeks? Do you buy right now? Do you buy in 8 weeks?
Yeah.
The simplest, easiest thing to do is just to have a set dollar amount. They call it dollar cost averaging, and put $500 every month into gold or silver, right?
Yeah.
That's fine. Okay, but then maybe you want to try to be a little bit more nuanced. If your average floor price that you're buying gold is like down here, right? Then you're going to get a better dollar cost basis than if you're kind of up here, and you get a better cost basis still than if you buy up at these extreme highs, right? So technical analysis can be useful, and overall, I've probably made most of my purchases down kind of toward this line. This kind of, I'll make it horizontal line. This is kind of back of the envelope.
Yeah.
But I keep trying to get, whenever I perceive there to be a lower price, is when I try to buy. So I'm a little bit under here. So anyway, all that being said, I want to try to figure out what the price is going to do over the next couple of weeks and months, because I want to decide when to buy and sell certain positions. And here's how I see it now. So we have a bull flag forming here, right? If it turns out to be a bull flag, we'll know in retrospect, because what will happen is this is called the measured move. So if you go to a recent low to the top of the flag, and you reduplicate that, right? Then that's going to be your measured move outside the flag. So we can actually copy this, right? And then we can move it to the base of the flag, and that's our measured move of the price action. Now this doesn't tell you the time. This could extend out here. It could have theoretically already gone into motion. But, this kind of gives you an idea of where price might end up ultimately, right? Once it breaks out of here. So what gold would have to do is it would have to be bouncing up and down around this channel and eventually break out of this channel to the upside. Now, of course, this pattern is invalidated if gold breaks down here and then breaks down through the downside.
Yeah.
This whole bull flag idea goes right out the window, right? So as long as the price action stays within this channel, and by the way, this channel's been intercepted about 1, 2, 3, 4, 5, 6, 7 times on the downside, and twice with wicks on the upside. You were going to say something?
Yeah. I was just going to ask, you were making the point that, this is helpful to determine when to buy, but you're saying here that we don't really know when this is going to be.
Might happen. That's true.
So on the x-axis, which is the time, if you're not sure, if you can't use the technical analysis to determine the location of that next jump up, then
what good is it?
What good is this to determine the timing for purchasing, I guess is my question.
Sure. Well, it can be used to determine the timing and also the price. So, okay. So let's say this is, for the sake of argument, a bullish flag, which it's looking like it is. It's technically broadening a little bit, but basically it's a nearly parallel channel. And it's toggling between these two extrema. So here's a perfect way that I'd use it. If I had dry powder and I was unsure of whether I'd buy or not, I'd probably consider buying whatever gold or silver related investments, whether that's bullion itself or miners, somewhere around here when it kind of gets down into this zone, right? Let's see. So I'd look at this as being a buy zone, right? And then likewise, if I had positions short term especially, positions that I wanted to sell, I'd be looking to kind of sell them around here.
I see.
Right?
I see.
What I'd also look for, and this is what sometimes happens with flags and technical patterns and everything else, this is what I wonder if will happen over the next couple of weeks and months. I wonder if it might reach the top of this zone
because of the news of this bank failure.
Because of recent bank failure news, because of general macroeconomic conditions, because of a Fed pivot. You can see here, if you look just at the candlestick chart, this last week put in a very bullish sign. I didn't think it was going to, honestly. I thought we were kind of going to crawl around here going sideways for a long time, or even decline some more. Unfortunately, I wasn't very excited about it. But this week's price action, this is a dragonfly doji. So it's a very narrow, long wick on the bottom. It's a green candle, so the open was a little bit lower than the close. It closed higher at the end of the week, right? And if you zoom in on it, then if you put wings on it, you can kind of imagine, it looks like a dragonfly.
A dragonfly doji?
Dragonfly doji. Sometimes people will also call them hammer candles, too. But the point is, it had a wide trading range, and it was almost going down toward the last week's lows and the prior week's lows, but it closed up pretty high, especially Thursday and Friday's price action.
Yeah.
I think this is pretty bullish. I think it's very possible we see more green candlesticks over the next coming weeks. Here we're on the weekly chart. Go ahead.
I don't know much about technical analysis, but I do know, isn't it like if there's one green candle and then the next week has a green candle that starts and closes higher? I don't know if that's called the dragonfly, but
it's even more bullish when you have three of them in a row. It's
three in a
called,
row is the thing.
Three black crows if it's red, and I think it's three white, three armies. I don't know if it's green, but anyway.
Okay.
The candlestick analysis can be instructive too. But this to me looks like a pretty bullish weekly close. I wasn't expecting it. I think we're going to see more upside over the next couple of weeks. So if I were sitting on a pile of cash right now and thinking to maybe buy some bullion, I might consider doing it. Or even short-term positions too, or miners or whatever else.
Yeah.
But here's really the question, and the question that I don't know the answer to is, when will this move exhaust itself? We did have a nice long move from the bottom here, hanging around 1620, all the way up to 1960. That's pretty big. Could we see a similar move in a similar time frame? We actually could. The problem is it could also stall out. So we have pretty strong resistance here at this trend line. It's been hit twice, and in fact, if you go back even further in history, it's actually if you adjust this is continuous contract adjusted, but the actual price here back at the top of in 2011, the actual price was somewhere around 1950, 2000. So anyway, you can argue this is some just long-term, broad, horizontal resistance here.
Yeah. I have a question about
yeah.
this. This might be a little bit off topic, but I am curious. So you have this point here. Let me move my mouse. This point here is when Russia invaded Ukraine, and there was
that was the August 2020 high. The second point is when
this is the one
occurred,
where Russia invaded Ukraine. So we saw geopolitical, crisis. Kind of a
flights of safety to gold and stuff. Yeah.
What was in August of 2020? Would that have been related to COVID restrictions?
Yeah, COVID, and then all the news had come out that there's going to be a lot of money printing.
Oh yeah, okay.
Yeah.
So those were the two pieces of news, if you look at that catalyzed the run up on gold.
Yeah, and they're very clean technically. They come up almost to the exact same point.
Yeah.
So I think this is an area of resistance, and when this area of resistance is punched through, or if it is, I think it's going to be pretty bullish. The question is, it can punch through in a couple different ways. There's a couple different things it can do that I can see realistically. No, I think in the next couple of weeks, more often than not, I think the price will rise and decline. Now, it is still possible, even though I think that's my opinion, it's still possible the price can doodle along in this trend range. I mean, really, this channel can go on forever, ever. And it can just kind of go sideways and then down and then up. I mean, this can persist for years.
That would be unfortunate.
That's a possibility. It's great if you're trying to accumulate a large stack, and for that purposes, I wouldn't mind it. But it's a little inconvenient if you're trying to do some short-term stuff. So this could happen. That is a possible outcome. But I think more likely we're going to see prices advance upwards and maybe retrace a little bit and kind of look like this. I think this is a pretty likely outcome. The question is, once it gets to that end, what does it do? Does it go up and then just kind of doodle along at resistance and then come back down and then go up again and take 2 or 3 or 4 attempts to finally break through? That's very possible. This is a hard resistance line here, I believe. Another thing it could do, especially if there's a major Fed pivot or a geopolitical event or some kind of catalyst, is it can go right up, shoot it right up through, and then kind of consolidate.
And I suppose that would be the flagpole.
The measure move from the flagpole. Yeah, it could do that.
What's over there to the right?
This is more of a long-term thing, right?
Oh, okay.
So it could punch out, but then sit on this trend line above it for a while, and this resistance then turns into support, right? I think that's very possible.
That means it's no longer a bullish flag.
No, it means it's broken out of the flag pattern and it's still going to go up.
Oh, yeah, okay.
Yeah. And just the measured mood suggested by this flag pattern would be up to here, which puts you about 2,500. Yeah. I think that's very possible. And if it does this, if it peaks above about 2070 here, 2100, and closes above that, especially on a daily, and even more especially on a weekly or monthly close, that's pretty bullish. And yeah, it might come down in this 2000 to 2100 range a little bit, but that'll probably become support in all likelihood. So for whatever reason, you don't have cash now, or you don't make purchases now of stocks or stack or whatever you're trying to do, and you miss a move and then it comes up to here, I'd say, well, don't try to buy right when it punches through at 2250, 2240. Maybe let it retrace a little bit back down to like 2100, because you'll probably have a more buying opportunity there. So I think that's another possible outcome we could have too. So basically, it goes up to resistance line and it doodles there for a little bit. That's one outcome. The other outcome is it goes up to the resistance line and then it goes up to the resistance line and then retraces from it pretty sharply, and then kind of like stays in this range bound for a long time. That's option number 2. And option number 3 is it punches out, and then this eventually becomes resistance, and then it keeps going up over time. That's kind of how I see this pattern playing out. So either way, I think now, right today, is probably a pretty good opportunity for anything precious metal related.
Well, I think a part of that is just, maybe it won't move things meaningfully for a while, but I think at least over the next week or two, gold there may be a flight to safety, a flight to gold as a safe haven asset,
right?
Because of this news of this bank failure. Would you agree with that?
Yeah, that can be very possible.
The question is, does that increase in the price of gold stick because, it's just one thing after another and people are starting to get worried, and now the Federal Reserve may not be able to keep hiking interest rates, and then you have inflation, competing with that. So
yeah, no, I think you raised a good question, which is what eventually is going to, or what set of factors are eventually going to cause gold to break out of this pattern? What's going to catalyze it? I don't think anybody can really answer that. And to what extent are momentum traders going to follow a big move if it's made? I don't know the answer to that. I think if we're above this 2070 line, if we punch through convincingly and close above it,
technical traders will jump on board because they'll see that as a sign that it's going to keep rising,
yeah,
right? And that's momentum.
Exactly. And the phrase "new all-time high" is very attractive to a lot of people.
Mm-hmm.
So, yeah, that could happen. We'll see. I really don't know, but I think now's a pretty good buying opportunity.
It sounds like you're saying if things are wiggling around this area, in this, sorry, I didn't mean to do that, but if things are kind of in this area, it may not be the best time to buy because it's already a little bit high and it could go back downward in this channel.
Hard to say.
But maybe if it were to be somewhere above this line, let's say 2100, then perhaps that is, again, although it's even higher, a good opportunity to buy because it may indicate on a technical basis that the price is going to go up somewhat significantly if it pierces through an all-time high.
Yeah.
Would you agree with that?
Yeah, I would.
Analysis?
It's sort of paradoxical because if you have certain to say like, oh, it's better to buy at a higher price. I'm not saying it's better to buy at a higher price. I'm saying the likelihood of buying at a higher price here, it's greater likelihood that it'll continue rising, and you won't experience even temporary loss or downdraft. Where if you're up here, you're getting at a lower price, but the likelihood that you might revisit 1860 or 1760 or something is probably a lot higher than if it's broken through this resistance line. Yeah,
I see. That's kind of an interesting.
These are all probabilities.
Yeah, it's just interesting to think about. Whenever I buy, I usually just buy based on, oh, look, I have some extra savings. I will put that into, more gold or silver or some derivative of that investment class. I never really sit down and say, okay, well, let me look at the chart and see what price over the next few weeks would be a good entry point for this investment.
Yeah. Well, again, looking at the chart, I'm looking at the weekly here. We have this nice dragonfly doji or hammer doji. This looks pretty bullish to me. I think we see in the next, and I'll even put time to it, in the next couple of weeks and months, I think we're going to see a measure move. I think we can just repeat this right up to here, and we intersect probably sometime by June. That coincides with the fact that gold tends to be more bullishly traded in the months of March, April, May.
Yeah.
Especially April and May.
Yeah, you told me that. I didn't know that, but
yeah, it also tends to be more bullishly traded in November and December. The 2020 trading pattern was an exception to that when it went up like basically all summer. I don't know that we'll have that again. We could if there's a big catalyst or geopolitical event, but I see this run ending at least with a coincidence of gold price probably at around all-time highs around early to mid-June. The question then is, okay, well, what happens after that? Does it doodle along the sideways? Does it punch through convincingly? And I don't know the answers to that, right? What I do know is I would like to accumulate more now. I would if I had extra dry powder, which I don't, because I spent it back here a couple weeks ago.
Well, that's good. That means you got it at still about a comparable price to what it would be
about
on
what
Monday.
I get it now. Yeah. So I spent my dry powder, but if I had more to spend, I'd go ahead and spend it.
It does seem like this is a good opportunity right now because you're in the middle of the channel and you have news that should probably, push the price upward.
Yeah.
And your downward potential, if you're staying in this channel, is not terrible because you're about halfway through. So that is kind of an interesting point in time right now that we're in with the price of gold.
It is actually, yeah. And then to top it off, I'd like to point out the trading action of the last 2 days. So Thursday and Friday, March? What would it be?
March 8th and 9th.
8th and 9th.
Or maybe 9th and 10th. I'm sorry.
But anyway, the Thursday and the Friday, those very, very strong trading action, very strong close. What I liked about that especially is that the safe haven assets, unlike in the time of the endemic-related shutdowns, that saw gold prices go down, bond prices go up, and U.S. dollars go up. Here, we're seeing a flight to safety trade in the last 2 days that saw gold go up and bonds go up and the dollar go down. Very interesting to me. So if we see a continued flight to safe haven status, bond yields will continue going down, aka bonds will get bought up, and gold will be bought up right alongside it. That's your classic safety trade right there. And if we see that, and gold's in the last 2 days trading on that basis, and people who are buying it to try to get to a safe haven, then, and there's more need for a safe haven over the next coming days and weeks, that can be really a huge accelerant for gold price action.
Kind of an exciting time right now.
It is. It is. That being said, the risk remains that technically the gold price could get sucked down, and then also fundamentally, if there's a liquidity crisis and people have to pay get dollars, this always remains at play for gold, especially considering that we have basically two predominating currencies. We have the U.S. dollar and we have gold. They don't always trade together. Sometimes they do, sometimes they don't. So we could have a liquidity vacuum suck up everything, the prices of oil, copper, stocks, everything, and then slurp it all up, and then the price of gold can go along down with that. So that always remains a risk. And if that were to happen, we could see gold revisit 1605, right? I don't really want to see that. The long-term stacker in me does. The shorter-term trader in me does not. So
I personally would hate to see that.
And also, it's a little bit demoralizing. So we'll see what happens. I'm pretty bullish. I'm probably more bullish than I have been in quite a long while on gold prices, based on Thursday and Friday's trading action versus a strong. Considering the trading action of Thursday and Friday, and also the strong dragonfly doji or hammer candle, and also this nice measured move that it's made up here, and then we recapitulate that after this pullback, and then that brings us right here. I mean, everything is very clean technically, and then this can maybe punch through and then get resistance, or maybe doodles along. We'll see what happens, but that's where I see us coming. So 1866, and again, I see us to being in about 2070 by early to mid-June.
Well, this is kind of fun. It's fun to make some conjectures on where we think things are going.
Yep.
But it'll be fun to post this as well because, hey, in a few months in June, we can look back and see how wrong we were or how right you were.
Yeah, that's true. But the problem is that these days...
Well, you, not me. I'm not making any conjectures. Let me clarify. I said we. I mean you.
These days, the problem with egg prices being so high is, that if I have egg on my face, it'll just be 4 times more expensive than it was
People
last
will
year.
think you must be a winner if you're using egg that, frivolously. All right.
Well, this is Michael
and Alexis
with Barely Bullish Investing. This is our gold chart update. Drop us a comment if you want us to go over charts of anything else, silver, platinum, oil, whatever. Happy to sit down and take a look at it. But I really just wanted to post this because I saw some things in the charts that just looked really interesting to me and had me feeling really bullish and excited.
Woohoo! Okay.
All right.
We'll talk to you guys soon.
Best of luck with your stacking, investing, and where applicable trading. Take care.